back, everyone, to a brand new edition of the Weekly Jab. I'm super excited to be back. Took a couple weeks off to handle a few things, revise a few things, but now we're back, and we'll try to make sure that I continue to push out these videos in a more regular fashion. So this first video is going to be a preamble, essentially, to the newsletter that I'm going to push out later today via Substack. So weeklyjab.substack.com. If you haven't subscribed to that, make sure you go there, subscribe to it. That is just pretty much the same exact thing that I'm going to do here, but curated in written format, also diving a little bit deeper into some of the nuances that I've talked about in weeks past, but also from a variety of different standpoints as well. So without further ado, let's just dive right in. So first, we're going to start off with Hearst. So for those that have seen this before, or watched some of the weekly jabs videos that I've pushed out before, and or been received some of the newsletters, you'll be somewhat familiar with her. So just a quick review. Essentially, all this is a momentum gauge for what we're looking at within the market. Specifically, we're just keying on Bitcoin right now. So it has the applicability to be able to spread across to a variety of digital assets. But right now we're focusing on Bitcoin, given in the current market structure, Bitcoin rules the roost. So what Bitcoin does, the rest of the market is going to do, for better or worse. And what we've seen, so before we sort of took the video hiatus, Bitcoin was following along this path, just really dropping subtly. So for those that maybe don't remember, levels beneath 0.35 historically have been good times to buy, and levels above 0.65 historically have been good times to maybe hedge your position, maybe sell, depending on your risk preferences, essentially saying that the market is getting a little bit frothy. So this momentum gauge that we have ultimately helps us to be able to spot market inflection points with a fairly high degree of certainty. So most recently, since having peaked out around halving and then began to trend downward, which it did coincide with price decreases, obviously flowing down into the 9,000s and went down into the mid 8,000s occasionally as well. But we did expect that price would drop further than it did, but it held up relatively well. And then over the past 2 months, essentially just meandering back and forth within a tighter and tighter range. Ultimately, Hearst dropped and then hit its zero barrier right here at 0.5, and then ultimately began to spike back up. So right here, we put out through our newsletters and also on the videos that we expected Bitcoin to go up, that we're just essentially waiting a buy signal, which means we're waiting for this to recover. And then once we saw that recovery, boom, buy signal kicks off. And then you see a subsequent sort of spike up in volatility in price, which we expected given volatility had been compressing essentially for the past 2 months. And coinciding with the Hearst exponent, we suspected that the subsequent volatility that was going to break out was going to be to the top side for the bulls. And ultimately, that has been what's rooted out. So jumping from approximately 9,200, peaking at 12,000, and now kind of floating around at 11,600-ish at the time that I'm sort of talking about this. So at the time of writing, Hearst is continuing to recover quite rapidly, although the slope is beginning to decrease a little bit, which is actually a positive thing. So the current value for Hearst right now is 0.44. So it has recovered a lot, which you would expect given how quickly prices jumped up. But at the same exact time, it is still far from overbought levels, or levels that you would look at and say, okay, maybe it's getting a little bit hot right now. There might be, it might be prime for a pullback, or, a little bit of a consolidation period. So remember, levels above 0.65 are what we're looking at for maybe a hedge, maybe liquidation, maybe just to be a little bit more cautious. But we're still far from that. So the current Hearst reading still looks quite bullish for everything that we're looking at. And then we've got an additional subset of risk indicators that we look at as well. And they are signaling the same exact thing. So the risk indicators have the same exact thresholds that we look at beneath 0.35 as good times to buy, or areas that we're looking to start to buy, and then above 0.65 areas that we're starting to look at to get a little bit cautious. So same exact thing. The risk indicators are a little bit more granular. They're a little bit more sensitive. So they're going to be able to pick up on the moves, the bottoming moves, a lot quicker than Hearst is going to be able to do, where Hearst is more of a macro, longer term sort of tool whenever you're looking at this market. I do the air quotes because this market moves and shifts so quickly that long term could be a month or a month and a half or 6 months, just depending on what the overall environment is going to be, but also kind of how quickly price moves or what the exuberance is in the market. But what you can see is around July 18th, we start, it starts to bottom, which happens to coincide right whenever price is at 9,100, and then signaling a buy signal, and then price begins to spike up, as we talked about before. Given this risk indicator is more granular, you see this large spike up and then this large spike down. That's not necessarily a negative thing. We don't look at that and say like, oh shit, we made the wrong decision. We need to get out of that particular position. That's not necessarily the case, and that's not how we view it. We would still view that as a solid buy signal, and we would continue to hold, which we did continue to hold through there. If anything, if you miss this first wave, this would be your signal, like to say, okay, once this hits and then bottoms where we see here for July 31st or approximately July 31st, that would be your additional opportunity to get in and buy. So as you can see, it has steadily climbed, which we would expect given what has gone on in the market in terms of price. And it is approximately sitting at the same exact level that Hearst is sitting at right now at 0.44, which again is a sharp rise given it started around down here around 0.09. But we are still far from overbought levels. So with that, we still expect a continued bullish bias until anything on our indicators, particularly looking at the risk indicators, given it's more granular, that'll be able to spot a potential change of regime more quickly than Hearst, where again, Hearst is more macro. We're not seeing anything like that on risk indicators right now. So we're still holding our bullish bias based upon the indicators and technicals that we have at the current moment. So again, looking at a moving average, this is just a way to sort of smooth out some of that volatility that you saw prior. You can look at it here. It's going to make the buy signal a little bit more slow, but still produces a buy signal well in time. And then we're seeing this upward trajectory that we would expect as well, with the value being at 0.30. So again, another area to smooth out some of that noise, but ultimately still signaling the same exact thing, that it has bottomed, price has gone up, but we still, in theory, have further room to run before we get to levels to where we would want to be cautious, or historically we have needed to be cautious. Okay, so this time what we want to do, and I mentioned it in prior videos past, that I want to introduce a little bit of technical analysis into what we're looking at. Again, just an additional data point for us to be able to look at, analyze, and also corroborate what we're seeing within our risk indicators and quantitative tools. So what we're going to look at right now here is a chart of weekly data for Bitcoin. And the reason why we want to go out on this longer term time frame is simply because we want to try to draw some comparisons to what we're seeing from a historical perspective. So right now, as you can see, there's a couple things on this chart. So one of the things that I like to look at is RSI, so the relative strength index, just as a gauge to see, again, momentum within this particular market, but also at the same exact time, are we getting to levels that are potentially frothy? So you can see here in 2019, we're getting well into the overbought territory, which subsequently reverses. And then obviously here, where we're making higher highs each and every single time in the 2017 bull market before it subsequently sort of cascades downward in the 2018 bear market. So again, this is just an area where you start to look at like, oh, here we're at on a weekly scale, so a long-term scale of RSI saying that we are at oversold levels. It seems like a good time to buy, which obviously that would have been approximately $3,500, I believe, from the crash of late of November 2018. That would have been an exceptional time to buy, and then you would have ridden it up all the way to 14,000 after the Libra pump on RSI, where you would have said, okay, maybe this is time that I take a little bit of profits off the table, or maybe hedge my positions, and you would have been handsomely rewarded for that. So these are some of the reasons why we look at this. And then this is the volume flow indicator that we look at, which is on every TradingView input. I personally love it because it's like on balance volume, but it gives you a little bit of directional heading. So all of it means is it's volume flow. Anything above zero is typically bullish. Anything below zero is typically bearish. But generally what you're looking for is direction, and if there's any divergence. So if price has been moving downward, but VFI has been trending upward, that's typically a very bullish signal that you want to look at. So right here, the biggest thing that we see is we've seen similar parabolic spikes from long time frame lows, where price has gone up, volume flow has subsequently followed. Here we are again. What's different about this time is volume flow was tucking beneath zero, but price was still hanging out in the cloud from the post having sort of pump and then sort of meandering down. But volume has subsequently spiked up, as has price. And right now, this is a Kumo cloud, which I won't go into all the details about it, but it's an excellent way to be able to spot key levels, resistance and support, specifically whenever you're looking at longer time frames. So what you want to see right now, a bullish sign is whenever price goes above this cloud. They call that a Kumo breakout. And right now, currently at the time, the weekly candle hasn't closed this week, but at the time that I'm speaking right now, it is above the cloud for the first time since summer of 2019. If it can close above that cloud, that is a potentially powerful signal. And furthermore, price is under it's under assault right now, or there's a little bit of price weakness in the market at the moment that I'm talking. But the key level to really look at is this level right now of approximately 11,600, maybe even a little bit lower, maybe, approximately 11,600. If price can use that, turn that into support, even with this sort of selling pressure that we're seeing within the market at the current moment, that is going to be very, very positive for Bitcoin's continue to ascend upwards and eventually break out of kind of what we're looking at right here, which you could maybe draw a descending line where you look at lower highs and lower lows. If it can break out of that, coupled with turning this into support, then you start looking at additional resistance levels or additional price targets historically, with the high 13,000s left over from the summer of 2019 being one of the most prominent ones that we'll look at. And then if we can break through that, turn that into support, then you start looking, okay, can we go up? Can we retest all-time highs? We don't know necessarily like that. We're not going to try to, make any sort of forecast and prognostications about that. But what we're seeing right now from a technical perspective is positive. It is positive because price is above the cloud currently using it kind of as support. We had some price weakness earlier today. It touched a little bit below 11,600 and then subsequently bounced back above. We've got a strong VFI flow. We've got a strong RSI flow. We're just now beginning to touch into overbought territories, but far from the exuberant levels that typically are indicative of reversals. So everything looks pretty good on the weekly chart. And then if we look at on a daily scale, we're starting to see something similar as well. So volume flow, very, very similar here, a strong trend. We're moving up. Price is firmly above the 20 period volume weighted moving average. And It's above the Kumo cloud. So all things are positive. Again, however, we're still looking at this potentially as a lower high, which needs to be broken above to really, I think, really ignite the next level of FOMO for additional retail participants, or the additional wave of volume to come in and then push it towards the high 13,000s to take out this mark left over from the summer of 2019. One thing that I will point out, which we'll want to see eventually get broken, is as of right now, you're seeing a slight downtrend in RSI. So if you've got price going up, but RSI going down, they'll call that a bearish divergence, which might be signaling that price is going to reverse. In what shape or fashion, it wouldn't be hard to imagine that it would drop down to support levels of 20-day moving average, which would be approximately 11,000, which kind of coincides with the support level here from the Ichimoku cloud at around that same sphere, around 10,900, 10,008. But then also one of the big levels that we look at that has been for the even the most recent flash crash has been 10,500. So if this holds, you might not be able to rule out a retest of there. It doesn't necessarily mean that the bear market's over. It just means that there might be a little bit of a drop in price consolidation before another leg higher. So that's something that we're going to have to keep our eyes on to see whether that continues to trend downward and not trend downward slightly, but then ultimately break up. So what I mean by that is if you look over here, what's a better example? Let's use this. So it's up and then it's down, seems to be signaling that a trend reversal is on horizon. Same exact thing here. You're like, okay, we've got a little bit of a bearish divergence. This might be a reversal, but ultimately RSI kicks back up and creates a higher high, which subsequently goes with price as well. So from here to here. So that's what we want to see eventually for Bitcoin, where it reverses, RSI goes back up, makes another higher high, preferably coinciding with price breaking above this key level, turning it in support, and then moving on to attack higher levels. So at this point in time, we'll just sort of stop. So we've talked about, first and foremost, our risk indicators and also some of the other quantitative tools. It sits currently bullish. It is, we see nothing on our quantitative indicators that would suggest any reversal. Doesn't necessarily mean that there won't be a slight downdraft in price to maybe some of the additional support levels, given how quickly price has run up. But in terms of a full-fledged reversal of price action back into a bearish dynamic or a bearish regime, where we could look to fall back to the 9,000 levels or even below that, we see nothing in the data or nothing in our quantitative signals that would suggest that. It signals that there is further room to run on the upside. Furthermore, whenever we look at that and pair that with technical analysis, it seems to suggest the same exact thing. Although there are some key levels ahead that price will need to push past, turn into support for it to continue its upward ascent. So we'll continue to monitor that over the coming days and weeks and keep you guys updated. So if there's any questions, I encourage you to not only subscribe to the weekly newsletter, because again, that'll be in written format, which might be able to help answer any additional questions that you guys may have, but also please subscribe to this channel as well, so that I'll make sure that I can continue to curate more and more videos, especially if you found it helpful, the combination of having the technical analysis with some of the quantitative indicators that we look at as well. So without further ado, I hope everyone has a great weekend, and I will see you next week on the next edition of the Weekly Jab. Take care.